Investors and traders, welcome to the channel. Today is 21st of September 2024. Hope everyone is having a great day and the weekend. So we'll be reviewing the key US tech stocks and ETFs in this video. As always, this video is for educational purposes only and it's not a financial advice. You have to do your own work. So it has been a pretty volatile week. I will be doing more analysis on it in our stock indices series. And it was kind of expected because the past week had some key economic data come out, especially with respect to the FOMC interest rate. So the Federal Reserve cut the interest rates by half a basis point. This is something that we had been actually speculating on for quite some time when we were discussing about the possible rate coming up. And last Friday also happened to be a quad witching, so we had the options and futures, individual futures, they're all expiring. So we saw a fair amount of volatility past week, and that last Friday was just no exception to the volatility. So let's review these longer term weekly charts. We are looking at the weekly QQQ. One key point is that it has completed this big ABCD pattern here, and also what it has done is the Nasdaq 100 futures have also completed that. The Nasdaq cash index also done that. Now what we have seen is basically a market which has gone sideways. 5th of August we saw a big pullback right into this key date. This is where a bottom came in, and that bottom has been held thus far. I believe that the 5th of August low is likely to be held till pretty much closer to the election time. We might see trading range behavior in the Nasdaq or tech stock indices. S&P 500 is already making a new all-time highs. So let's see what the QQQ is telling us. And here we go. It's being held by the 78.6% retracement right here. We had a one test of it on the 19th of August, then it pulled back, and then now it's gone for another test. My guesswork is it can pull into this gap formation here, maybe get up to the middle of it, which comes around 495, maybe around 504, which will be, right towards the top, maybe make a slightly higher high as well. Those sort of possibilities are there, but most likely it looks like it might actually peek into this gap formation highlighted in this gray box on the QQQ weekly chart. On the daily chart, what we can see is, here we go, we have this gap left here. Here we go, and this is what I had actually mentioned on the weekly chart. So it looks like we had this trend line here. The market actually broke above it last Thursday. Not a great follow through Friday, but it looks like it might just drift right into here in this box, and then we'll see what sort of price action we get out of it. And then if we go back and take a look at the XLK, which is the Spider Select Technology Fund, similar kind of a pattern formation. This trend line, it broke to the upside, now it's coming for a retest. One possibility is that it can pull back a little bit further, test this one here again, but the key part is that it's still being held back from the 78.6% retracement. The gap formation that I'm talking about is right here. Here we go. So it's also visible on XLK daily chart, and then on the weekly chart, here we go. Just make it so that is just the normal chart. Okay, so here we can see that this one actually is really, the XLK is really interesting because it went slightly above the ABCD, the D point, for a few weeks, more like a month, where we could see that it was kind of going up and down, but not a lot of strength into it. And then we saw a big negative candle on the 15th of July and forming a bottom on the 5th of August. Now, when this bottom was it happened, one thing I pointed out was it was right to the 38.2% retracement. QQQs, they did not come close to it, so they're a little bit stronger, but it was one of the first indices to actually make this 38.2% retracement of the lows of October 2022. And this is where we had a key timing coming in on the 5th of August. And on the indices daily chart, such as the Nasdaq futures, we had a key pattern formation with timing coming in, and when the price meets time, the pattern is complete. And I was quite confident saying that, okay, we have a completed pattern, and we have not seen the this low broken out thus far. Eventually it might get broken down, but as I was saying, most likely it's gonna remain like this. The 5th of August low to be remained unbroken on closing basis till sometime in for close to election time. That's what I'm thinking. But price action dictates everything. Now let's take a look on the Nasdaq cash and the X. Here we go. So NDX, QQQs, they are doing similar kind of pattern formations. Here we go. This is the gap. Most likely it's likely to move into this gap, which will also be the 1.272 expansion of this swing. So whether it's gonna be, it is able to do an ABCD and take these highs out, I wouldn't rule that out, but the real question will be how the price action is in this gap formation and this 1.272 expansion, which could be strong resistance as well. And here, this is the pattern I was talking about. It was a very nice ABCD right into the key date coming from our timing model, 5th of August, and we have seen a pretty strong move to the upside, and then retraced right into the 61.8% retracement, and that has been held thus far. Now let's move to the individual stocks, and here I'm gonna start with the weekly chart of Apple. Here we go. So Apple came out with its new iPhone models. I think they are now becoming available in stores to be purchased, but some of the software features related to artificial intelligence, I believe they will be rolled out gradually, but you need an iPhone 16 in order to get it, get the artificial intelligence software on it. So anything older than iPhone 16 it's not gonna work with the artificial intelligence software updates. So I think that's a pretty clever thing done by Apple, and it's not the first time they have done it. There was a cycle which started with the 5G, and of course the iPhone sales took off, and then I think this is likely to start another cycle which should benefit Apple. And what we have seen is last week, although September tends to be not a great seasonality month for Apple, we saw a pretty nice candle formation. I don't like its close, because to me there's quite a lot of wick on the top and a fair amount of wick on the bottom as well. Had it closed with somewhere around here, that would have been a much stronger candle. Nonetheless, it's just testing its highs of the week of 26th of August. Now this orange pattern that you see, it's still valid, because there's a possibility we could be looking at a corrective ABCD, which could bring this Apple price down anywhere between 200 to 192. If it gets to 192, that will be a very interesting level to take a look at, because we'll have a completed ABCD one-to-one price projection right at the 61.8% retracement, and that's going to be a pretty strong support level, and the chances are that Apple is actually in this ABCD move higher. So I am pointing it from this being the point C, but if this corrective move is taking place, and if it took place and it went down here, we'll have to just adjust it like here, and that would actually make it even better, because then we'll have a confluence coming right really perfectly at the 1.618 expansion of 262. So that will become a pretty good target. So let me move it here, and then we'll see how the price action pans out, but there is a possibility that this is point C and we are actually moving higher. But Apple stock is strong. There's nothing bearish about this stock, so that's a good thing. And then here we go and take a look at the daily chart of Apple. Here we go. Let me bring it down here. On the daily chart, you can see last Friday's candle is not a good looking candle because I believe it went and took out the highs of 29th of August. Yes, it did, just by a bit, and then closed lower. So this is why I think that this move might actually be a corrective move, but it had filled this gap. Now it just filled it by just pretty much done kind of double top formation here, which is not confirmed yet. And the other thing is just moved in these gaps, so the chances are it can pull back and at least fill these gaps, and look at this trend line, maybe come back and retest this. The other scenario is that 200 292 is that weekly ABCD. So we're just watching this one from the price action perspective, and let's see what the price action will give us. And now the next stock, we'll take a look at Tesla. Here we go. This is the weekly chart of Tesla. So I believe Elon Musk gave us another kind of a surprise, perhaps a good surprise, that he's stepping down as the CEO of X or Twitter. I believe this was the news, which is good because that way he's able to focus a lot more on Tesla. And of course, he got his big, massive package approved by the shareholders, by the board. So he has all the incentives to dedicate more time. And I think Tesla stock needs that from the price action. So here, last week I removed the possibility that it could move down here, which I did not remove in the daily chart. But I think we have now got something that we can actually also remove that. So there's a possibility it's moving in the CD leg higher to about 330, 340. Then if we take a look at this, here we go. And here we go. This is the Tesla daily. I'm going to remove this here. Here, oops, let's remove something else. Here we go. And I'm going to remove all of this right now. I hope it's not too early to remove it, but the reason I decided to do this is because what Tesla did is, this orange ABCD we were discussing, it had a nice kind of a breakout on the 19th of September, then an inside day. So it looks like it's going to go and complete this ABCD around 248, maybe a little bit higher, and then the chances are that it could actually just extend this move higher, or if it pulls back, then it could pull back maybe where this trend line is right here. But the important thing is that we were basing that ABCD off this highs, and the stock actually moved above that. So that's a good thing for Tesla stock. Now let's take a look at Meta, because Meta, is one of my favorite stocks for tech. It did something really interesting. It's right at the upper boundary of this wedge formation, where we also have 1.27 to expansion and 1.61 at expansion. This was our target, but it could also be somewhat of a resistance level. But look at the stock. The stock is very, very strong, unless we get a candle like this, which could cause a pullback. There is a chance that this resistance level that we are looking, which is in fact our target, the kind of strength, which is this stock, could in fact take it much higher, maybe to about 690 level. And if we look at this on the daily chart, here we go. So on the daily chart, what it has done is it had been in this consolidation pattern, which is on the weekly chart, that wedge kind of formation we looked at for quite some time. It just broke above it last Thursday. It didn't have a very significant follow through to the upside on Friday, which is because it is Friday, it's the weekend. So not a lot of investors would want to carry risk exposure over the weekend, for example. So the shorter term targets, of course, are where we have this big massive 1.272 that we saw on the weekly chart, around 569, 570 level, and then about 603, 604, and then we have on the weekly chart some levels beyond that as well. So this one is looking good, pretty good. I think the only time it begins to change the scenario is if it breaks below this wedge formations base right here, which is this trend line. So pretty strong looking stock, one of the favorite stocks. I'm only in tech looking at really Tesla, excuse me, Apple and Meta, really, and NVIDIA, and now Tesla had some improved price action. So these are the only kind of stocks for the Magnificent Seven. I'm not a huge fan of Amazon at this moment. So all depending upon the price action. So now let's take a look at Microsoft. There we go. So Microsoft stock on the weekly chart. This was a strong support. It has held for quite some time now. It has done this ABCD, which I'll show you on the daily chart, right towards the 61.8% retracement. But the thing is that it has also completed this big ABCD. So one of the possible scenarios is that it might actually be in a correction, and that could actually pan out over several weeks, months. But ultimately, we might just have something similar to what we had the bear market of 2022. And that would be, it would be like a normal kind of a pullback, because it'll be coming back from these lows of 2020. It'll be like a 38.2% retracement right here. So fantastic company, but of course it has moved quite a lot in terms of the price, and with the interest rate paradigm changing, the tech stocks and big companies should get should benefit, and also the small caps. But there's also this big, huge element of rotation. So some of the money which actually went into these Magnificent Seven stocks and has done fantastically well. So maybe some investors might just take some money off and put it into some of the depressed, from a price action perspective, stocks, which are more likely to benefit from a lower interest rate environment. For example, small caps. So I think it's nothing to do with the company itself, more with the rotational aspect of it, of the market. Now here, look at these black candles closing here, right where we have this ABCD and the 61.8% retracement. So fair amount of resistance in here. And the other thing is that it went and just closed this gap here as well. I don't see this gap was closed. I don't see, there is another gap, which is not a traditional gap, but in my books this is also a gap formation right here. But I think the Microsoft could actually pull back from where it is, just because it is at a key price and pattern point. Now let's take a look at Google. So let's actually move to the weekly chart for Google. So Google has actually completed a pattern which is very similar to the pattern we have seen in the Nasdaq 100. It completed this big ABCD. So it was short of that for about, I don't know, close to about 10 points, where it completed this 1.6 minute expansion, and we have just seen this stock pull back, just like what we were looking at in Microsoft. There is a possibility it could actually pull back about the same amount what we saw back in 2022, which could actually bring it back to about 125, which is absolutely fine, because if you look at this trend line from March of 2020 and the 61.8% retracement, I think that will be a pretty interesting spot to take a look at this stock from a long perspective. And now if we move to the daily chart here, here you can see I've got these kind of McDonald's arch, but only a single arch kind of a pattern formation. It's just to show you a top or a rounding top here and here and here, but there's also something called RT, and then we have the LT. So RT means right translation. So this is something to do when you look at the phases in a cycle. So here, if you just look at this chart, it is going up from the lower left corner of your screen to the upper right corner right here, and then every time there is like a pullback, the the swing high was taken out. So you can see that the right hand side is breaking above the highs on the left hand side. So this is like a right translation. It just translates the right. So this is like when you're looking at cycles, this is the part of the cycle which is moving to the upside, or if you were to look at this arch as a cycle, then it is in this part of the cycle, a bigger cycle. This is just a smaller example, so you can think of this one. If it's the bigger cycle, it's just moving up like this. And here what has happened is that on the 10th of July we have seen a peak come in. That was the all-time high, and that happens to be a pivot point as well, because this is where the market actually began to move down. And then the other peaks that we see, so there are attempts to rally, they actually went lower than the swing low. So what is happening is that we are seeing the rallies come in, which are like from the left hand side, and then they move lower. So it is left translation, so it's translating or moving from the left hand side lower. Here it was from the right. So this is how it is moving here. The interesting thing is that this stock had a rally now, which is slightly more than the rally it had previously, but it is right at this 38.2% retracement. So it is at a resistance, but if it breaks above this, then we could have something where the market could actually begin to take a look at this kind of a gap formation, a pretty big gap left here, and it could actually begin to look to close this gap. So that possibility is there, but right now is 38.2%, is a strong resistance level if in a strong trending market, but it is also possible that we could have a B C D which could take it towards this higher to close this gap. So that the gap comes around the 70, between the 61 and 78.6% retracement. So we'll have to wait and see. It will be a pretty good rally in the stock if that were to happen, but I think we have seen a pretty good top coming in the stock of Google. Everything is dependent upon price action. So this is how I'm looking at it right now. Now let's take a look at the stock of Netflix. There we go. So Netflix made a new all-time high last week, and looks like it wants to go and touch this 727 level, which is the 1.272 expansion of just this little range here, and I believe we have a small ABCD forming here. Here we go. Here we go. So yeah, I think anywhere between a 727, 766 is like most likely where the stock is moving, but essentially it's moving in this channel formation. So sometimes it just goes and tests the top of the channel, then it pulls back, point support. It might just keep on doing this for some time. The interesting thing is, if you were to look at this, it was also kind of a channel formation. It was really strong here. It was also strong here. It was really steep around here, and now it's getting a little slightly less steep. Eventually it will begin to turn into a trading range sometime, then will form a kind of a peak, and then we'll begin to see the left translations happening. We are not there yet, so just keep an eye on this one. Now let's take a look at Roblox. So the Roblox is really interesting. We were looking for a long time for the stock to get up to this level, which is smaller ABCD in black, but also structural resistance coming from the highs back from 5th of February 2024 and 26th December 2023. So stock is there. Now let's see if it's got enough strength that is actually able to go and tackle the highs of 8th of August 2022. And if it is able to get above that, then the chances increase that it's going to go for the 38.2% retracement, $67. And then that's going to be a pretty big level. Getting above that, the stock becomes really strong. It is in the news that some insiders are selling the stock, which is this stock was brought to the public via SPAC, so that might have been the case, just like Planeteer, that some of the long-term insiders, the investors, they were looking to actually get some of their money back. So yeah, looks like it's the common cycle which is taking place. But the stock is actually showing strength as well. So we like to follow Roblox because it is a pure play for us for the metaverse concept. Now, Meta, formerly Facebook, used to be the key player for that, but Mark Zuckerberg, he pivoted into artificial intelligence, and investors just loved that idea, and the stock actually really turned from the 78.6% retracement. A fantastic thing to actually take a look at. Let's do that right now. I think it'll be educational. Here we go. Let me move on to the yeah, let's do the monthly chart. Here we go. Okay, so the Meta stock, it was floated on the stock exchange roughly about 12 years ago, and this is something which public really loved. But this is one of the things about the IPO is that the insiders typically who brought it to the public, they want to actually exit. So the stock actually began to decline, and it was also around this time that there were a lot of questions about the Facebook's business model, because Facebook, although loved by public, because they were using it on a daily basis, they were able to see that they were able to find some of their long lost friends, relatives. They could connect with them. They were able to talk to them, do many things. It had the commercial appeal as well, because business pages, etc. But what was the real case and how Facebook was going to generate revenue? So it was around the 2015 or a little bit before that, or maybe in the 2013 area region, circa, that Facebook kind of began to figure out, okay, they can actually really use their data and use it as an advertising platform. This is how it all got started. And then you can see that really very, very nice rally in this stock. Here we saw a peak come in September 2021. Quite a few things with regards to scandals. There were some scandals all along the way as well, such as Cambridge Analytica, and then I think there were a few other things which are happening around this time period. You can Google about those things. And then Mark Zuckerberg actually also began to pivot, and he came up with the Meta concept, and then amount of spending that needed for it, the development for the kind of thing he had envisioned. A very, very, very clever guy, of course, but I think the investors were not very comfortable with the amount of spend it required and what sort of return they could get out of it, and what time. So we saw the stock move from these lows to this high in 2021, and retrace all the way to the 78.6% exact. Of course, the monthly charts went a little bit lower and stuff, but this was the strong support when it was happening. And then we began to turn really bullish. The stock, it's all documented here, once it closed above this 200 mark, and the reason is because it closed above the 38.2% retracement, and we had several targets for it. But even this, look at this, for several months it was just bullish candle closes. It met our targets really well around here, and then it just made new highs, and then one target after another just broke. One of our key targets was around this level, 450, 466, and roughly 500, because of psychological level. But it was just tarnished to the upside, and look where the stock is. It's going for 569, which is this big 1.618 expansion. And then on the weekly chart, we also have some other patterns coming close by as well. So although it had a breakout on the daily chart, but now looking at the longer term charts, there are actually possible upcoming resistance coming as well, which is actually target for us. But target also means that profit taking, so we could see pull back from here. So really interesting. I think the next a few weeks is gonna be very, very interesting, just because by taking a look at this monthly chart and this 1.618 expansion coming in, we'll have to wait and see how the market will react for it. Now, we have had targets before, like here, but the Meta stock is so strong and one of the favorite stocks right now for me, that it could actually extend beyond it. And what it would mean is that we could in fact be having this ABCD extended. So let's take a look at this like this, and the extension of this, I've not even plotted that, so it's gonna be the 1.618. Here we go, and which is around 681. So it might be in that, with this kind of strength in it, it might be just going for it. So we'll be just watching this level very, very closely, pretty much where we are now. But if the stock remains strong, most likely it is moving higher, which could be the case. So we'll just watch these levels really carefully. Now, let's take a look at Zscaler. There we go. So the Zscaler, a very volatile stock. On the weekly chart, we are watching for two possibilities. As long as the C point is held, it has a chance maybe to about 220. Beyond that, maybe it's in the CD leg higher. On the flip side, if this point C is broken, and especially the 61.8% retracement coming around 150 mark, then we could actually be looking at for this gap to get filled around 100 mark, 103 to 100. On the daily chart, what it is doing is, if you can see, is 1, 2, 3 kind of a triple bottoming fashion. And here is just testing the 38.2% retracement. So it has kind of held our point C, but it remains really volatile. I don't like the gaps here. Look how many days it took to get up there, and just in one day, boom, it's right here. So this kind of volatility in this stock, which exists for Zscaler, is something I don't like. It kind of reminds me of a very popular stock, which is also in the cybersecurity space, called FireEye, and then became Mandan, something like that, and then eventually was bought over by Blackstone, I believe, the private equity. So I mean, I'm really closely watching the 150 mark, and then I think after that, the stock is most likely moving towards par or 100. So we'll have to wait and see for this one. Now let's take a look at something a little bit different, which is not a tech stock, but I was watching Caterpillar because the Caterpillar stock has been pretty strong, and what we can see is that it is in this kind of consolidation here. Let me try drawing a big box around it. Here we go. So it's been consolidating since March, April of this year. Eventually, it's likely to break out, and the chances are it's likely to break out to the upside, because it's just been in this. Look at this trend line right here. There are several ABCD patterns that you can see, and then there's a bigger one which is completing around 418. So that's going to be an interesting one to keep an eye on. And CAT is part of the Dow Jones, which is a price weighted index. So if CAT is going to move, the Caterpillar stock, that it will also have some impact on the Dow Jones index, and of course it's part of the industrial stocks group. So here what we're looking at, the bigger ABCD 450 mark. This is the kind of consolidation which is taking place, and it has broken out of consolidations before, like for example this part around here, and the most interesting one I'll show you is right here. And one of the things is that in 2016 we also had a election taking place in the United States. So this stock had been just moving lower, and then in January 2016 something changed. It just began to form a bottom, and I can see that it was an ABCD, a very nice one, I believe. Here we go. There you go. So it can't miss an ABCD. And then we saw a meteoric rise in this stock. Look at that. In 2 years, it doubled, more than doubled. really interesting. So there we go. We'll just keep eye on it, and I think I'll start another segment in which we begin to watch industrial kind of stocks, because the rotation we are seeing in the market, industrial stocks, the ETF that we watch has done pretty well out of it. So again, thank you very much for watching the video. Good luck and good trading, and I will speak to you guys soon. Have a fantastic weekend.